All right, what's up, YouTube? We got a just a quick video, brief video going over how I use macros in my trading. If you watch my trade executions, or if you're in the Discord and you pull up my daily screenshots here, I always have macros annotated on my chart, and I get a lot of questions, as you can see here, of people asking, how do I use macros? What I look for? Um, how do I implement it in my trading? So I'm gonna go over that today. It's nothing complex, it's nothing too crazy, but it does play a significant role in my trading and deciding, whether or not I want to take a setup. So without further ado, first jump in the Discord if you're not in there already. I'm in there answering questions all the time. We're trading in there. I'll be live streaming here only in the Discord very soon. So click the link in the description if you're not in the Discord already. But let's go ahead and head over to our screenshots and check out these macros. All right, so here we are in the daily screenshots channel in the Discord. I love this channel because I can go back and just study old price moves and do videos like this. So macros. ICT recently just taught that they occur at every hour, 10 minutes before and 10 minutes after the top of the hour. So there's a macro at 8 o'clock, 9, 10, 11, and so forth. Now, three main things I look for when I'm using macros in my trading. Okay, this is me personally. Number one, what happened during that macro, and does that align with my bias on the daily chart? Okay, I'll say it again. What happened during that 20-minute interval? Okay, what happened during that macro, and does that align with my bias I already have established on the daily chart? Okay. Number two, fair value gaps. Three, order blocks. If we have a fair value gap form during a macro, an order block form during a macro, does that support price and does that align with my bias? Okay, so we'll break down some charts here, go over some examples so you can see what I mean. All right, if you're in the Discord, you can check these out on your own account as well. Just head to the daily screenshots channel. So, all right, we've been bullish on Nasdaq for the past. We're trading at an all-time high. Pretty sure we've been bullish for the past 3 weeks now. So every daily chart or every chart I pull up here, our bias is bullish. Okay, remember that. We're bullish. What occurs during this macro, during the silver bullet hour? I'm in Central Time. So 9 o'clock to 10 o'clock Central Time is our silver bullet hour. I'm looking for longs. We're bullish on the daily chart. Well, 5-minute relative equal lows, we drop down into that sell side and we form a fair value gap. Okay, this is also a balanced price range. Single pass down, single pass up. Okay, if you want to be a little bit more advanced. But inside of this 20-minute window, we take out sell side, trade down into a 15-minute fair value gap, and we form a fair value gap. I'm watching to see, does this support price? Look at the bodies here. Look at the bodies unwilling to close past midpoint of that fair value gap. Then we rally, right? This is a beautiful entry. I'm using the macro to see. Now you can enter here. There's nothing wrong with that. But I like to use the macro to see, does that fair value gap that formed during that macro support price? We can see that there. Once I see this rally here, my mindset is, all right, I need to find a way to get long because this right here is telling me everything I need to know. I'm already bullish on the daily chart. Once I see this rally, how the heck can I get long and participate in this move? We have buy side resting above here. Well, now we have a breaker. Low, high, lower low. Last up close candle in between the two lows is your bullish breaker. What do you notice about this breaker? It forms during that 20-minute window. All right, beautiful buy. Let's look at some more examples. All right, we're bullish again. All right, volume imbalance. We drop down into that. When? During that macro. Look at the bodies beautifully respecting and laying bodies over that volume imbalance. So there was no up close candle or down close candle in between these two price points. What do we do during that macro? We lay down a down close candle and we lay down an up close candle. That was the function of this macro. We rally Once we come back down into this, I'm trusting, all right, I didn't buy this because it's just sloppy. But if I were to buy this, I would be confident that this low wouldn't be taken out. Why? Because this move here, completely balancing out this volume imbalance, occurred during the macro, and we have a breaker. Low, high, lower, low. Okay? Trade down into that, trusting this low won't be taken out because this occurred during that 20-minute macro. Let's keep going. This is a beautiful one here. This trade is on my YouTube channel. What day is this? January 24th. You want to check that out. This is just beautiful price action. But take a look. We have consequent encroachment, midpoint of this wick. Remember, our bias is bullish. The macro, okay, whatever happens during that 20-minute window should be aligned with your daily bias, okay? That's important. Consequent encroachment of this wick, midpoint, draw that forward. Look at the bodies here. This up close candle here, that opening price is the exact same price as the midpoint of this candle. The exact same. Go into your charts and check that out. What happens next? We rally. Inside of this 20-minute window, we form a breaker and we form a volume imbalance. And we have fair value gaps here. Low, high, lower, low. Last up close candle in between the two lows is your breaker, forms in that 20-minute window. We get displacement and we have a volume imbalance there. Inside of your breaker, that's a beautiful buy. You can watch my trade execution on YouTube. I buy this and I take it up to, I believe, right here, somewhere in this area. Okay, beautiful. Let's look at a couple more. This day was garbage. We're talking about this in the Discord. This was disgusting. Let's see. All right, right here, macro. What is the function? What did price do in this macro? Remember, we're bullish. Well, we take out sell side, resting below this low, trade down into the low of a 5-minute fair value gap. Same thing that happened on that previous chart. Halfway point, consequent encroachment of that wick, draw that forward. Once I see stuff like this happen within a macro, I know the algorithm's function, all right, during this 20-minute window is occurring right there. And then we displace. All right. So in my trade execution, what day is this? If you want to go watch it, January 18th, you can watch that trade execution. I'm buying in this breaker because I'm trusting this low doesn't need to be taken out. Why? Because it was formed during that macro. You can see the bodies respecting halfway point of this wick during that macro. We rally during that macro. We form a breaker during this macro. I'm comfortable buying here. I'm comfortable buying here because the macro already did its job here. I'm trusting this low doesn't need to be taken out until we get traders putting their stop losses up here and until we get our buy side objective up here. All right. Setups form here again. And the macro during that silver bullet hour, we form a fair value gap. Come back into there. Price action is choppy. Nonetheless, the logic is still the same. Fair value gap and an order block that forms within that macro. Look at the bodies respecting that beautifully there. Rally, fair value gap, rally, buy side tagged. Let's do a couple more. All right, so here we go. You should start seeing a trend now. Remember, our bias is bullish. Macro, what happens? We trade down into a rejection block on the 4-hour time frame. Breaker, what do you know about this breaker? It forms during that 20-minute window. We have a low, high, lower, low. What also forms during this macro? Take a look. What forms? A fair value gap. This is your silver bullet. So you have a fair value gap resting just below a bullish breaker after trading into a rejection block, after trading into a daily fair value gap. All of that is occurring in this 20-minute macro. Great buy. How do you know and how do you trust that this low won't be taken out? It can be. All right, nothing's perfect, but the logic is all of this occurred during those 20 minutes. So if you buy this here, why would we take out this low? when the function was to trade down to the rejection block, we created a breaker and a fair value gap. We could buy it there, buy side tagged. Okay, another setup forms this fair value gap during that macro, buy it there, reprice, reprice to this inefficiency. Let's do two more. I don't want this video to be crazy long, but I really want you guys to get this. All right, right here, balanced price range, single pass up, single pass down. All right, this displacement occurs during that macro after trading into a rejection block on the hourly time frame. Set up here, sloppy, but nonetheless, it delivers. So short in the fair value gap that was created when was this fair value gap formed? In the macro, trade up into it there. You can see the body's respecting the midpoint of this balanced price range. Okay, unwilling to close past that. Trade down, taking out relative equal lows. That's a nice little scalp in a choppy consolidation day. Right here, London closed lunch macro right here. What do? We trade down all the way to the low, perfectly to the 15-minute low fair value gap. Right there, there's a small little fair value gap. What do we know about this fair value gap? It forms during that macro. Trade down into it, rally. You don't have to buy down here if you're not comfortable with that. Wait for the next opportunity. Order block. Okay, I posted this trade on YouTube as well. I'm buying this order block. People ask me, why'd you buy it? What was your reasoning for buying it? It's not much I'm seeing here. It's because during this macro, we traded down into this fair value gap, rallied after perfectly repricing that 15-minute fair value gap with this drop down here. I'm trusting that this low or this low here doesn't need to be taken out because the macro is in motion. It's working right now. It's going. I buy it here. I take out buy side here. You can watch that on YouTube. And let's go for one more. This is a simple, beautiful rally. Fair value gap, trade down into it. Fair value gap forms during the macro. Beautiful. Let's find another one. One more. I'm having too much fun. Here we go. This one right here. So, again, our bias is bullish. Okay, Nasdaq's been trading at all-time highs. Nothing about our bias says let's go short. Again, macro. What happens? We take out sell side. All right. We're not looking at this as fair value gap, bearish order block. Trades up into that, goes short. Okay, some people can get chopped up. Oh, look what happened in the macro. We formed a bearish order block. We took out buy side here. This is the 2022 model. Take out buy side. We have a market structure shift. We have a fair value gap. Let's trade up into that, go short. No. Okay, you still have to know bias on the daily time frame. Okay, that's very important. That's why that's the first thing I look for when studying these macros. Is it aligning with my bias on the daily time frame? So we take out sell side during that macro. We rally. What forms during this 20-minute window? You should be able to see this by now. A breaker and a fair value gap. Low, high, lower low. Last up close candle in between your two lows. That's your breaker. Forms during the macro. We're already bullish. We like to see that. We displace. Fair value gap. Forms shortly after all of this takes place down here. Great buy. Goes down, taps the breaker. Great buy. We rally, take out buy side. When do we reverse? After we take out a 15-minute buy side liquidity pool and trade into a volume imbalance. During that macro, we reverse. So that's it. Just a quick recap again. Three main things I look for during, or rather, while I'm using macros in my trade. Whatever happens during that 20-minute window, does that align with my bias on the daily time frame? Okay, you still have to know, where price is going. You still have to understand the draw on liquidity. Okay, you can't just, outline these times and assume that's gonna, take your trading to the next level. You still have to know bias. Two, fair value gaps, and I guess you could throw breakers in there as well, simply because we've seen a lot of breaker examples in this video. A lot of breakers forming during that macro. So in all honesty, you could say just any PD arrays that form during that macro that makes sense. So in this case, a breaker forms during the macro. That makes sense. We're bullish. We want to see that. A buy side imbalance, sell side inefficiency forms at the high of this breaker. That makes sense. We're bullish. Buy it. So that's really it. It's nothing too complicated. You have to know bias, okay? If there's one thing I can't stress enough, you have to understand bias. You have to understand where the market is likely to go on that higher time frame, daily, weekly chart. It's not enough to simply have these times outlined on your chart, but you don't know where that daily candle is expanding or where price is reaching for on that daily chart. All right. If you're bearish and you're reaching for something down here on the daily chart, you're going to short this and you're going to see this as a bullish order block. Okay, you may see this as a bearish breaker. High, low, higher high. You may see this candle as a bearish breaker. I like to go short. We're bullish. Okay, so you have to understand bias. That's important, or else you're going to get burned. Okay, just like everybody else. So that's really it. Just a quick recap. Three main things I look for, okay, when I'm putting these macros on my chart and using them in my trading. Number one, whatever happens during that 20-minute window, does that align with my bias on the daily time frame? That has to be in check. Number two, fair value gaps, and I guess you could throw in breakers in there, and really just any other PD array. We've seen a lot of breakers form during that macro. So fair value gaps, breakers, order blocks, okay, whatever PD arrays that form during that macro and make sense, okay, and are aligned with my bias on the daily time frame, I want to see that. Okay, so I like to see bullish breakers form during macros when I'm bullish on daily chart. I like to see fair value gaps form on top of breakers, okay, when I'm bullish on the daily chart occurring during the macro. So hopefully this helps. Hopefully this can take your trading to the next level. If you have any questions, message me in the Discord. Okay, I love putting videos like this together. Okay, I love this stuff. So leave a comment down below. I am posting this one on YouTube, so comment down below if you have any questions, or just join the Discord. I'm more active on there if I'm being honest. Quick reminder, I'm also live streaming for Discord members only once we hit 100 members. I think we're at like 80 right now, so check that out. You don't want to miss the live streams. It's going to be a bunch of fun. So that's all I got. Till I see you guys in the market next week. Peace.